Hey, what's going on YouTube? Millennial Trader here from the Millennial Trader YouTube channel. Today is December 7th, 2024, and in today's episode, we're going to recap the cryptocurrency market, look at the Fear and Greed Index. We'll take a look at the Bitcoin dominance chart to see if we can gather any new information in terms of whether some of the altcoins are starting to display dominance or if Bitcoin is still the more prominent cryptocurrency to hold. We'll go through a few charts, take a look at Bitcoin itself, uh, recap Bitcoin relative to Ethereum, check in on Ripple, and then a new coin that I recently started to take interest in is AVAX. So with that, let's go straight into the first index, the Crypto Greed and Fear Index. So similar to my last episode, we're still currently within the extreme greed area, currently at an 82. But obviously, you can see that over the past couple of days, we've just kind of been bouncing up and down. Nothing too outrageous at the moment, but as I keep mentioning, generally speaking, we don't typically stay within the extreme greed area for an extended period of time. And so, even though Bitcoin's price is, as of the current episode, at a little over $100,000, it wouldn't surprise me if we start to taper off and slowly creep back down into the lower 80s, where it's the, I guess, defined as a greed area, and potentially into the neutral area, where, as I previously mentioned, this is kind of the area where we typically stay for most of the time. Anywhere between the greed and the neutral area, just historically speaking, we've kind of just spent the bulk of our time in here. Now, yes, of course, the initial pop up was a result of a combination of different things. Donald Trump being reelected as president, obviously, Bitcoin's price shooting well past $100,000 this past week, and periodically sustaining it and coming below it, but we're kind of just hovering in and around that $100,000 mark still. So, um, you know, so far things seem to be lining up the way that I'm expecting. Where at some point, maybe this coming week, we'll potentially taper off into the lower greed area and stay there going into the rest of this year. And then in the new year, coinciding with the inauguration of President elect Donald Trump, that might put us back into the extreme greed area, or other political events may arise that may change the dynamic of the market. So for now, it's still a bull environment. Continue to be bullish the sector. But again, generally speaking, I don't expect us to be within the extreme greed area for an extended period of time. But we'll kind of just monitor the situation as time progresses. The next chart is the Bitcoin dominance chart. And again, I typically look at this just to get a lay of the land in terms of Bitcoin's relative market share in comparison to the rest of the cryptocurrency sector, and noticed recently that the Bitcoin dominance has actually started to come down in a significant way, where we were at 59% just over 2 weeks ago, and now we are, right now we're at 53. So, we're slowly starting to come down, and interestingly enough, you can see that the altcoins, or all the other cryptocurrencies grouped into the other category here, it's starting to display some dominance. And then, of course, Ethereum to the bottom, it's kind of just stuck within this 12, 13 area. So we'll see where Ethereum goes. But as I'll explain in a future chart, my I guess my lean is to actually start building a position in Ethereum for the potential for Ethereum to outperform Bitcoin um, into the new year. But we'll see how that shapes up, and we'll trade the markets based on what it's showing us, as opposed to preemptively doing something before the indicators that I use, or some of the models that I rely on tell me otherwise. So like I said, it's still a bullish market. I'm kind of leaning towards looking at some of the other coins, um, just to generate alpha relative to Bitcoin. And I'll talk about another coin that I recently started to take interest in and that I have a position in as well. All right, so I'm going to just bring in my my chart, and we'll take a look at Bitcoin first. All right, so you'll see we have the first chart of Bitcoin. As I keep mentioning, we're currently on a DeMark sequential, not excuse me, a DeMark 13, as well as a sequential 9. We're in the process of completing um, combo 13, currently on an 8, as well as having, I guess, a subsequent sequential countdown phase in the process. But um, as I've mentioned before, I generally think that the area in which we'll top out is in and around this $107,000 mark. And again, the models that I use is based off of Tom DeMark, who invented the sequential and the propulsion and the combo indicators that I use. I trust them exclusively because of how reliable they are in terms of identifying counter trend opportunities. And so with the sequential model, there are essentially two phases to the indicator. The first part being TD setup, which relies on momentum to define price ranges. So that's the first part here, where it's showing the blue indicators from 1 to 9. And then the second component is what's called the TD countdown. So this is these red numbers, which is trend based, and it looks for low risk opportunities to fade established directional moves. And so, historically speaking, the most amount of money is made not by following the trend, but identifying those counter trend opportunities ahead of the rest of the market, because that additional 10 to 15% that typically isn't identified by the rest of the community until several weeks afterwards. That's typically where as a counter trend trader, where you generate the most amount of return, because you're identifying those counter trend opportunities well ahead of those who are just consistently looking to play the trend. So if you were a Bitcoin bull and you were kind of waiting for an established trend to develop, you may have gotten in here, whereas had you gotten in at when this Tom DeMark sequential indicator showed a +1, you would have been able to generate a few extra percent in terms of generating alpha. And obviously, if you're benchmarking yourself to, you know, the S&P 500, or whether you're using some kind of crypto index, managing people's money, you know, these are the tools and the indicators that the professionals use to generate the returns that they do, and ultimately outperform the rest of the trading community time and time over again. So for me, I believe me when I tell you that these indicators are right more often than not. And a lot of the the indicators that people use are lagging indicators, whereas the sequential and the Ichimoku clouds indicators that I have overlaying the price bars, they are projected, they're intuitive and objective, and they give me reliable points of potentially taking profit, entering positions, scaling out. So, the utility of these indicators are very well established. I think there's some research papers that were done by, I guess, some academics on the validity of um, the sequential indicator. And I think in one of the studies, it said that it was something like 75 or 80% valid in terms of generating profits over time. But I like it for the fact that it incorporates disciplined money management. It effectively allows you to see the overall picture of the market in different time frames, and its usefulness can be applied to any market, which is something that is hard to say for some of these other indicators that people develop, or tools that people say are extremely useful, but when the markets change, they're ineffective. Whereas the sequential and the combo and the propulsion indicators, they've stood the test of time. And what's also nice, and what I keep mentioning, is the fact that these, at least for sequential and combo, they were developed in the 1970s, and there's been minimal tweaking to the actual default nature, or the default setup, which again is just a testament to how good these indicators are and how reliable they are, compared to some of these more traditional metrics like RSI or MACD, which tend to identify trends much later than when the sequential and the combo indicator display them. So enough of that, me rambling on about that. So right now we're on, we've had this big run up. I'm seeing two exhaustion indicators, a 9 and a 13. It doesn't mean that we're going to stop from here, but clearly from when these two signals showed up, we've kind of just been holding within this trading area. You'll see here I have this trend line being drawn, and it was just an estimate. But the other thing with technical analysis tools is they're subject to interpretation. You can change the line just ever so slightly for your thesis to continue to be valid. So I kind of just use this as a general guideline, but we'll see whether this candle holds or if we come back down. From a risk reward standpoint, I don't necessarily think it's appropriate for you, if you're being tactical, to want to put on new positions at the current time, because the way in which these models were developed is such that it's generally considered a really bad time to be putting on new positions, because you'd be subject to potential drawdown just based on how the model was calculated in terms of printing these exhaustion signals. So for me, I'd much rather wait until if we get an opportunity to enter into new longs at around this $90,000 price level. But having considered the fact that we're at a 9 and 13, even that area here showing by the propulsion momentum indicator may not be actually valid, and I may want to wait until the conversion line or the baseline from the Ichimoku clouds kind of move up a little bit, at which point time would have elapsed, the counts would have moved on from a 3 to potentially 4 or 5 or whatnot, or maybe this could potentially indicate the presence of a bearish price flip, in which case you may want to start entering a short position. But that's me just talking hypothetical at the moment. Right now, we're still in the $100,000 price range. I do expect Bitcoin to reach this $107,000 level because there's significant momentum in the market. If I'm looking at MACD, the area between the two lines is significant enough that there's enough momentum in the market to continue to push Bitcoin up to the 107. But me personally, I would wait until this $90,000 area for price to come back down for me to want to initiate a new long. But if you're long the coin fundamentally, then continue to be long until the markets tell me otherwise. For the time being, these are buyable dips, and that's just generally how the market is. In the next chart, I'll kind of go over my thought process in terms of why I'm looking at Ethereum relative to Bitcoin in terms of wanting to enter positions there. So, all right, so this is Bitcoin relative to Ethereum. Obviously, when price is going up, that means Bitcoin from a relative point of view is stronger than Ethereum, and that has been the case since about mid-June, where Bitcoin was just on this explosive run all the way up until this where we are currently, playing at $100,000. But more recently, we've seen Bitcoin actually start to underperform the relative performance of Ethereum. And in my previous episode, I mentioned that we're getting close to the completion of a 13 count, at which point that would signal potential exhaustion in the market. Not necessarily that you potentially want to start you want to start shorting Bitcoin, but rather that Ethereum's performance is going to be better than Bitcoin. So whether that's Ethereum gaining on a percentage basis more than Bitcoin, that would result in this chart now starting to dip back down, because any underperformance would result in Bitcoin kind of going down, which consequently would mean that Ethereum's price is actually improving. So that's one of the reasons why I'm building in a significant position in Ethereum, because I'm looking for the potential of it to dominate the market, to continue that bullish momentum, because again, it's still a bull market in the crypto space. But now, after Bitcoin's massive run, maybe it's time for it to kind of take a breather, consolidate before gathering enough strength and pushing itself back up to that $107,000 level or beyond, just based on sometime in the new year. So for now, I'm currently long Ethereum. I've been long it for the past couple of weeks, and I'll continue to add positions into Ethereum, knowing that, especially because we're on a -2 of a -9 combo count. So that is a buy setup because there is a price. This was the price flip to now suggest to me to go long Ethereum, and that's kind of just where I am directionally. And obviously we can see that MACD is also now starting to cross over bearishly. So again, that's just another confluence of signals for me to want to continue to be long Ethereum versus uh, Bitcoin for relative outperformance. If I put on the Ichimoku cloud, obviously the lagging line has now come down significantly from the top, having peaked up at this exhaustion area from the propulsion model. I do anticipate that we'll get down to the baseline, so continued outperformance for Ethereum, and ideally we could potentially get all the way down to this propulsion full exhaustion level here, at which point, that might be um, the next coin to kind of out take the reins and push the market in a different direction. So we'll see at that point in time. But I'm kind of playing for this area from a relative price perspective for Ethereum to kind of play it down to. So that's me. Checking in on a Ripple. Oh, let me fix this chart. Just give me a second. Okay, so I previously mentioned that really the only area of resistance is the previous all-time high for Ripple, which was at $3.35, going back all the way to 2018. So that's kind of where I believe Ripple will eventually top out at. Um, we're on a 5 of 9 count, so potentially 4 additional weeks uh, of price uh, outperformance. So again, that might get us in and around to that previous all-time high. Um, last last week we essentially retested the the last known area of resistance, which was the week after Ripple made its all-time high back in January, the second week of January. So we tested it. We came back down probably from people that got stuck, and I've been waiting to kind of break even. But there has been significant dip buying, which is why the candle continues to kind of move up week after week. Congratulations if you got into the market um, the first week of November because you made something like, let's just check. I think you made something like 400%. Yeah, you made like 476%. So that was a good trade, but you know, without utilizing these models, how would you have known that that was the the trigger to get long the coin? So, um, congrats to anybody who got in. The DeMark indicators are so useful and they're so intuitive because even in um, non-trending markets, so long as price has been moving uh, from week to week, you will eventually get these exhaustion signals 9 and 13, at which point, uh, whereas you wouldn't have been able to identify these turning points had you used RSI or stochastics or anything else like that. So, believe me when I tell you the institutional community is watching crypto play out. They're getting in advance of everybody else in the market, and they're capitalizing on the ultimate price appreciation of these coins, well ahead of when the rest of the herd is identifying them. So for me, I'm also long Ripple. I anticipate it to reach all-time highs again, at which point I will probably take profits and look to potentially reinitiate a new long, just depending, but it'll depend on where we are at that time and overall market sentiments. Okay, so the next coin that I'm going to take a look at is AVAX. So interestingly enough, we are on a sequential 13 count, but in between when this 13 show printed, we also started to generate another sequential setup phase. So, um, it wouldn't surprise me if this secondary TD setup ultimately completes to a 9, but I'm kind of holding this for a short-term trade, looking for it to kind of to come back and retest where this previous 9 count completed. And so my thinking there is that one, there's significant bullish momentum in the coin. Just look at these candles where it's closing higher than the previous week, higher, higher, higher. Every week the close is higher than the previous week. We ultimately completed a 13, which is fine. But this 13 count is coming from all the way back from October's beginning sequential count. So, it went up to a 9. It took almost a full year for the 13 to develop, but in between that time, another 9 printed. And so that 9, sequential 9, is entitled to its own 13 count. So, it'll be interesting to see whether or not the trend continues. But for now, I'm kind of playing on the long side, and I entered AVAX because I was looking at it from a relative price performance in comparison to Bitcoin, and I thought that just the way in which AVAX had kind of broken out from this long-standing downtrend line, it was kind of good risk reward for me to initiate being long AVAX for the potential for it to come back on a relative price performance to this 579 area. And that just signifies that AVAX is stronger than Bitcoin. And so I do anticipate that it will have further price gains and higher price gains than Bitcoin over, let's say, the next 4 weeks. And that's kind of the duration at which I'm willing to kind of carry the AVAX trade on. So sometime in the new year, I'll be looking to exit, hoping for the potential that we continue to see upside continuation up to this area here underneath the cloud, in and around there. If we push through the cloud, then the last area that I'm potentially looking at to scale out is the top of the cloud, the leading span up here, and that I think will have some significant resistance, just based on how when you have a flattening cloud, that generally means there's this is an area of significant resistance, and should it break through, then that would change my initial thought process. But for now, I think getting to that secondary red cloud area is a major area of resistance, and I don't anticipate it pushing through there. So I'd be much rather comfortable taking the trade off once we touch the first part of the cloud right here. And that's it for this week. I'm long Ethereum, I'm long Ripple, I'm long AVAX. It's still a bullish market, so don't get me wrong. I'm not looking to be a bear. I think, in fact, being counter trend or trying to short this market, you're just setting yourself up for um, a losing trade. You might be able to get a short-term trade of maybe a day or two, but beyond that, I think you're just setting yourself up to take significant hits. And the risk is obviously, with price potentially going up to infinity, right? That's the theoretical concept. I wouldn't suggest shorting anything for an extended period of time. I do anticipate Bitcoin um, underperforming Ethereum going into this, towards the end of December into January. Um, and from a Bitcoin dominance perspective, right now, as I previously showed, Bitcoin's dominance is actually starting to tick down, whereas the altcoins are starting to push up. So that's notable. It could suggest that a lot of the other coins are going to make significant price movements to push the market higher, which is the same reason why I'm still leaning bullish overall directionally. So that's it. That's it for this week. If you like the content, subscribe, like the video. If you want me to do any analysis on any other coins that you currently have or are thinking about entering, let me know in the comments. Also, let me know if there's anything that you didn't like about some of the videos that or at least some of the educational components of the videos that I'm doing. I'm trying to demonstrate models that are typically not available to the retail community without paying significant premiums in terms of subscriptions or buying the platforms themselves. If you're using like a Bloomberg terminal, I think it's like $15,000. So there's significant price impediments for the regular retail trader, and there's nothing wrong with just following the trends. But if you're looking to outperform over time, you have to find sophisticated tools that have an edge in the market, and these tools have the edge. This is how I've been able to demonstrate my own thesis, and the objective nature of the model tells me when I'm wrong, and I respect those trading areas as areas for me to get out or to take profit. So that's it for this week. Thanks a lot, and we'll see you next week. Actually, in a few days when I update my videos in terms of where the market is then. Thanks.